Today I wanted to present something that actually runs the small risk of being a little indulgent, but I wanted to talk about some of the technical decisions that we've taken as a company that gave us the confidence to buy the assets that we've bought over the last couple of years. We have to truly recognise that this gold price was unforeseen by all of us and makes us all look smarter than we are. But underneath that, there's actually been some decision-making processes that we put in place with a few very specific technical examples that I wanted to talk through today. And I don't normally focus on it, but at the second last paragraph, I'm actually showing some slides from previous presentations that we put together as a company. So there will be out-of-date information here, and those slides are labelled. So I note that there will be non-current, instead of promising about the future, there'll be some discussions around things that happened in the past that may have changed. And so just for a little bit of context at the high level of what we're trying to do at Heliostar, we want to become a mid-tier gold producer. We want to be producing 500,000 ounces of gold a year by the end of this decade. It's an ambitious goal, but we've taken a lot of steps forward to get there, and we think can get nearly all the way with the production, with the portfolio of projects that we have today. And so we're spread across Mexico, very, very proud of the way we've been able to grow the business here. And so we'll talk today about the first decision we made to buy our Ana Paula project in Guerrero, and secondly, 2 opportunities at the La Colorada mine in Sonora. And so our growth story has been incredibly rapid on nearly every metric. It started with the purchase of Ana Paula at the beginning of 2023, and a change in strategy that we'll talk about, that we saw Ana Paula as a high-grade underground gold mine. And then we got a significant leg up last year when markets were still tough, when sentiment for Mexico was still very low, and a seller that was very keen to get out the door. And we bought all of Argonaut's assets for incredibly only $5 million, cancelling $20 million in payments that we owed on Ana Paula. And since then, the big pleasant surprise has been the upside in the portfolio. We've restarted production at La Colorada. We've got plans to restart at San Agustin, and then mid next year we want to make a construction decision at Ana Paula. And so these are well summarised here in that change from assets that were undervalued and definitely had not had the capital, the profits that they'd been making. They were profitable mines, particularly San Agustin and La Colorada. That cash flow was just being stripped out to Canada and the US. And for the first time, their profits are being reinvested in their future. And today we put out some pretty strong drill results from La Colorada that I think speak to the potential of these assets. In terms of corporately, we plan to produce 30 to 40,000 ounces of gold this year. So we've got a long way to go to achieve our goal, but we think we can be in that 200,000 ounce a year range when we bring Ana Paula online as a consolidated guidance in 2028 onwards. And so here's our current production pipeline, in dark blue from La Colorada, in green from San Agustin. But we think with additional resources, maybe these grey arrows are what we can achieve when we get the studies out. Further production from La Colorada with some of the drill results and stockpiles that we've defined, potentially expanding the mine life at San Agustin, and then this is our big moment when we bring Ana Paula online in 2028. And so, to move quickly, you have to have deals that make sense, and you have to see something that other people don't to get the kind of step change in valuation that we've been able to achieve. And so the first of those actually came from a completely different view to I think most people had considered for Ana Paula. Ana Paula, when we bought it, had a PFS done, and it had its key permits all put in place in 2017 to go and build an open pit mine. When we looked at it, we would not have bought Ana Paula to build an open pit. The risks that we saw was a $22.5 million pre-strip just to get down to the ore, and then you had to mine a lot of low-grade, pretty poor economic recovery material just to get to the economic engine that drove the deposit. But what our team saw, and I'll not name many people, but I'll really name one person, the key vision for this was Sam Anderson, our VP of Projects. He did the work and he's like, hang on, there's a lot more high-grade ounces in this resource than's being credited for. And that was the opportunity that led us to buy Ana Paula. We recognised that we could build a mine with a lot lower upfront capital and we could be in the high grade early, which has a massive impact on the economics. And so this is the first slide, and I noticed the yellow text at the top. That's a historic slide. And so this was the presentation that we put together as we were buying the asset. We stole this graphic off a lovely presentation that Craig Gibson put together showing the resource. And you can see it really clearly. There's a huge sea of low-grade material. You know, 500-600 metres by a kilometre of low-grade gold material with a spectacular high-grade core. And the key line here is the resource, the M&I resource, 1.46 million ounces at 2 grams. Overall looking quite good for an open pit, but split into this spectacular zone and then a lot of marginal material. And if we cut a northwest section, the topography would look even worse. A big V shape going up to pretty steep hills, which made, from our opinion, that pre-strip not particularly attractive. And so if we zoom into that area, an area that we called the high-grade panel, these was the drill holes in the deposit when we bought it. It had a lot of drilling done on the deposit, but most of the drilling was from west to east. You can see all these holes like this, or vertical. There was very, very few drill holes on any other orientation. And we would have done exactly the same thing if we bought the deposit. It's a skarn-style system, admittedly a very distal version of it where we have the mineralisation, and the geology dips to the west. So it makes complete sense to drill from west to east drill holes. But what we saw was actually this high-grade panel is controlled by an east-west structure. And so it turns out that drilling orientation is very poor. We're much better off drilling from north to south or south to north. And so when we looked at the drill holes, actually we'll go the other way. When we look at the resource model, we've clipped this resource model, and I'll go one slide ahead because it really shows it. Everything in pink is above 5 grams, and everything in magenta is above 10 grams. And you can see these pods of 10-gram material with all this lower grade, I should never call 5 grams low grade. If I come back, to the slide, these gaps actually coincided where there wasn't drill holes. If you look at the drill holes, 81 metres at 14 grams, 68 metres at 8 grams, nothing. Next hole, 63 metres at 15 grams, 57 at 18. So where there was drilling, there was 10 gram plus material. And where there was no drilling, there was 5 gram material. And it became really clear to us that the only reason that this material is because of the spacing between these drill holes. The search radius was appropriately conservative in the resource model that Argonaut did, and it was just dropping the grade in areas of greater uncertainty. So we looked at it and said, well, if you take the resource model away, there's consistent high-grade mineralisation all through this panel. If we're to drill these white areas and repeat the results 20, 30, 50 metres away from it, then we can connect a ribbon of 10 to 15 gram material and fundamentally change the underground mineable part of this resource. We also thought there was areas that we could grow the resource as well, applying the same logic to areas that hadn't been well drilled, noting that Ana Paula, the high-grade panel, is only 60 metres wide. So if you drilled on that side of the building and then drilled outside in the foyer, you could miss a 1 million ounce ore body. You didn't need to be off by very much on those east-west drill holes to not categorise it. And maybe that's what some of these drill holes point to as well. When you drill over the top of the high-grade panel and you've got no drill hole in it, you project that low grade into that volume because you don't have a true representative drill hole of the higher grades to defend that volume, for want of a better term. And so we planned the initial drill program. Would you believe the resource update only came out with about 3,000 metres of drilling in 2023? And so we focused our drill holes in blue to test these areas where we thought we could show continuity. The only reason I've redacted those blocks is QP's told us we weren't allowed to say that back in the day. It goes against disclosure rules. So we were just putting some value on those blocks. It's the only reason that they're hidden there. But the big takeaway was, obviously, if we can add hundreds of thousands of ounces at high grades, we have a huge impact to the economics and the ability to mine Ana Paula underground. And so this is the same view at the end of that drill program. And one of the ways we were one of the criticisms that people were making was, you're just drilling the best part of the deposit. No wonder you're going to get great results. But what we tried to do was compare the grade thickness predicted in the model with the grade thickness from the drill holes that we drilled. And you can see here, every hole bar one was an increase on the amount of gold, a proxy for the amount of gold mineralisation that the resource model was predicting. So we had a lot of confidence that we were going to upgrade the resource, and in the best possible way. We weren't adding tons of material. We were changing the ore grade to the blocks of that material. So same mining cost, making the rock worth more. A great way to upgrade a resource. And so we put the resource upgrade out in November. You notice we've got slightly cooler as a company, so our background presentation's got slightly better than it was in the previous one. And so we put out two resources. Ignore the bottom table at the moment for what we're talking about. So it's nearly 2 million ounces combined, M&I from a sort of global resource perspective, so including all that low grade. And so that tells you that on an apples and apples comparison that we grew the resource. We didn't just take from one and add to the other. It went from 1.46 to 1.8 million on a global resources. And when you look at the table itself, the high-grade panel now looks much more consistent in that 10 gram plus material. Here it is in a close-up. Even better, we found a continuous zone of over 200,000 ounces at better than 10 grams per tonne. Clearly that's going to have an incredible impact on the economics as we start the mine. And if we break down the model a little bit further, on the left side of this bar here, you're seeing the old resource, and on the right-hand side, you're seeing the updated resource. And again, I'll focus on the top table at the 2.5 gram cutoff. I won't talk about the lower cutoff from a global perspective. We added an M&I perspective. We reduced the total ounces, which is natural, going from an open pit to an underground, but we lifted the grade by 36% in the M&I category, up to averaging about 5.5 grams per tonne total. 8.9 for the measured and 5.4 for the indicated. We did back a lot of resources out into inferred, which makes sense. You've got broad space drilling, you're never going to mine underground at that. That's a huge opportunity for us. If we can continue to convert resources at Ana Paula at the same resource upgrade as we did in the past, well, then we're going to be able to add even more ounces with a resource conversion program. And we're starting a 15,000 metre drill program this month that's going to be focused on doing exactly that at the property. And so we paid $10 million with, ultimately we were going to pay $30 million for Ana Paula for an asset that came with effectively a free 300,000 ounces at 10 grams per tonne. All because our technical team saw something in the deposit that made it a lot lower risk acquisition than it would have looked without that. It's a pretty incredible transformation for the deposit. In fact, this east-west structure, east-west concept we're going to take further. We think this is a west-looking section. You can see that big halo of low grade. We think there might be more of these east-west structures to the north. And so now we're going to do what we did at the high-grade panel and turn the rig around, drill north-south holes, seeing are there more of these parallel structures to the north for us to find and add to the overall resource. The second opportunity came with the more recent acquisition of the remainder of Argonaut's portfolio. And it's again sort of challenging the teams who know these deposits so well to think outside the box or to adjust the metrics of which they've been constrained in their thinking with. We're all guilty, every one of us in our lives, of sort of taking certain dogmas as the way to do things. And we have to challenge and reinforce those a little bit when you've got different information. In this case, the biggest one being the gold price change. And so I'm going to talk about two aspects of La Colorada. So when we bought La Colorada, mining had stopped in September 2023, and it was just residually leaching gold. I think the reputation of La Colorada has always been a good little mine. It built El Dorado in the 90s. It built Argonaut in the 2010s. I was talking to Arturo Navarro, who said the global resource, if you add the historic mined resource with the current resources, is over 2.5 million ounces of gold. I think it's quite surprising that La Colorada is that big of a deposit, and I think when we're done, we're going to find it's even bigger than that. And so the challenge that we had was the Creston pit had mineable reserves that needed a pre-strip to get access to. Another pit, Veta Madre, needed a permit. In fact, it's probably better to show these here. So the main pit here in the centre needed to be cut back. That sustaining stripping wasn't done by Argonaut. They stopped doing it as they were trying to build Magino and were starving for cash. And Veta Madre needed a permit to expand to the south. So there was upside at the deposit, but it was stalled out. And so we needed some short-term cash flow to try and find a pathway forward, to deal. How do we deal with not getting the permits for Veta Madre or needing a significant amount of capital for Creston? Is there any 5,000 ounces that we can find that would make a big impact to us as a company at that highest risk moment while we're bedding down the transaction? And so the team came back and said, well, at one point we were reprocessing some of these stockpiles. Maybe that works. And so the team at La Colorada said, we think this junkyard stockpile, Chatarera, called that because at the end of that, lots of old broken down equipment was stored on top of it. This was mined when El Dorado was mining at the Gran Central pit. And that was a $250 gold, cut-off grade was 0.8 to 1 grams per tonne. So maybe there's an opportunity here. And so we went and did the work on that. And in reality, we probably over-drilled it, but it meant so much to our cash flow and not needing to finance that and it only cost a couple of $100,000 to do this work. So we drilled 65 drill holes into that stockpile to put together a resource to see whether that was going to be a financially viable solution for us, because that was permitted and we had the leach pad for space to put it on. So we didn't need any extra permits to process this material. And so at the end of that program, we were able to put about there's about 30,000 total ounces, recoverable ounces, 20 of those coming from the green section. And we actually found an old historic tailings, which has got nearly 15,000 ounces in it, that we might also be able to process as well. This is tailings from the old high-grade underground veins, probably 120 to 70 years ago. That will be another opportunity for us when we complete the met work for those. So we were able to do that work, and we showed that this made money at 2,200 gold. And so at these prices, this is an incredibly profitable operation for us. If you think that if you go back through the steps that we took about, we challenged the team to come up with a really clear business solution for us. The main change was gold price change. This isn't technical geological insight to unlocking it. This is recognising that, hang on, at these gold prices, things that we hadn't considered before may be very valuable. And then we did the work and came up with a very rigorous drill program, resource estimation program, and very, very detailed network program to make sure that this would work. And I suspect we're going to make, in the order of $5 to $15 million, depending on what the gold price hangs in at this year. We bought the Argonaut portfolio for $5 million. That waste dump paid for everything that we bought. If you think a bit more longer term and more fundamental, there's another aspect that today's drill results really speak to for the company. In that when we looked at Creston, it's got a really nice reserve, about 312,000 ounces under the Creston pit, going around 0.7 grams per tonne gold, oxide gold, with about an 80% recovery. It's very attractive ore once you mine that material, once you do the pre-strip down to get down there. But when we looked at it more closely, when the team looked at it more closely in the due diligence, it was clear that the resource was bounded by the edge of drilling, not by the sterilisation of the gold mineralisation out into barren rock. And so when we looked at it, we're like, if we can convert any of this waste to ore, it has a huge impact. You've already assumed the cost of moving that ton of rock. So if we can get paid for it, it can have a really outsized benefit to us as a company. And then obviously shallow ounces get mined earlier in an open pit, so they come earlier and get the NPV value of upfront value creation as opposed to cash flow in the future. So we commenced a 12,500 metre drill program that'll end up being well north of 15,000 metres when we've completed them. And we're going to incorporate those drill results in an updated plan for La Colorada. And so here's a section that was through from the Argonaut material. And so you could see some pretty impressive deeper drill holes, 39 metres at 3 grams here, 18 metres at 2.5, 18 at 4, 4.6 at 7 grams. There's some really high-grade veins that drive the pit at El Creston, but very little up here, big spaces up here. So our initial focus was, let's focus up here. We don't need high-grade drill results. Anything above the sort of 0.16, 0.17 cutoff grade is going to change this deposit. So we actually thought we were going to drill a lot of boring holes. That's what I was joking, the most impactful but most boring drill program we were going to do as a company. And so this plan map up the top right, you're looking at all the blast hole data in the pit, and it shows the 3 main veins, the south, the intermediate and the north, and all those little satellite veins that make up the open pit resource. Outside, you can see these historic holes or trenches. There's almost none along the northeast extension and southwest extension. So these wider drill traces is the program that we drilled. And so that we're presently surprised, 37 metres at 1 gram, 11 metres at 1.7, 14 at 1.6, 10 at 0.8. We were consistently drilling 5 to 50 metre intercepts at sort of 0.3 to above 1 gram oxide gold in the shallow part of the deposit. You can see them here. The resource was tracking down, but there was no drill hole here, and this was all assumed to be waste. So having that technical team dive in, dig in, do the work meant that, yes, we think we're buying it for X, but we think there's free ounces. And an old boss of mine, when I worked for Newcrest in Australia, always told me that the cheapest ounces you'll ever buy are the ounces you don't pay for, which is this is a great example of. There was no value for these because no one believed they were there. So if you can buy a project that doesn't have the resource fully drilled off, you're getting free upside in that negotiation. If you take a step further, and if we apply that analogy to a wider step, here's those 3 pits, Gran Central, El Creston, Veta Madre. Waste dumps, leach pads, tailings area, waste facilities. There's very, very few drill holes at La Colorada outside of the resource or the infrastructure. We put out holes today, nearly 9 metres at 25 grams gold, 700 grams silver, lots of sort of 2 to 8 metre intercepts at 5 to 15 grams per tonne gold. We think that there's an underground mineable future, particularly under El Creston and Gran Central. And then we've got some great regional targets. This is a drainage anomaly in the soils. This here is a 2 kilometre long gold in soil anomaly. I note 0.2 is above the cutoff grade of the pits, yet it's never been drilled. So we think that there's a lot of upside at La Colorada. Once we finish the immediate drilling that's going to focus on the resource, we'll turn our attention to the underground potential and then to the regional potential of this deposit. Is La Colorada just an epithermal vein system with 1 vein, or is there more? Most epithermal fields here in Mexico have a lot more of these vein structures. So we think we've already got a significant resource endowment in mined history and current resources on the main structure that connects these pits. We debate internally about how that comes, but it's going to be a fun debate to solve. But outside of that, we think there's a lot more upside. So in 6 months, La Colorada's gone from an asset in care and maintenance that was going to run to its end of its residual leaching, with generating, in this case it was the cash flow from San Agustin that paid for this drill program, that's generated a 6.5 year mine life, and then we think we can further extend that again, all because the team has saw potential in these deposits that gave us the confidence to make the acquisitions that we made. And so to summarise that presentation is, we want to build a company at Heliostar that has a really strong technical culture. We think the reason that we should do that is, as we just talked about, these inputs, the input of our technical team has directly led to the investment decisions that we've made. We've looked at other projects that we've turned down as well. So it's not always, here's why we should do something. There's reasons to not do deals as well. It's always the project that will define our interest in acquiring it in Heliostar. The second, as we talked about with the stockpiles and the waste at El Creston, that's the best way to unlock value. We all look smarter as a management team of a company when you find more material than you expected in something that you bought. And that comes down to giving your technical teams the freedoms and the capital to go and do this work. And then the third part, which is underrated, is it also protects you from risk. But we could have easily just rolled the dice and started reprocessing that junkyard material and said, let's see if it works. Instead, we have extreme confidence that it was going to work because we'd done all the preparatory work before we start. You can't control all the risks in mining, but the ones that you control, you absolutely should spend the time and money to do. And so I think one of the things that I wanted to, as a key takeaway from this presentation is, you can move as quickly as we've moved. We've come a long way in a short period. It comes, though, on the back of the quality of the people who are actually doing the work for you to either manage your risk or to unlock upside. And we've gone from being an exploration company to a producer over the last 2 years on the back of that team. So I didn't write the full list out because I know I would have missed someone, but that's why we chose to be a sponsor of this conference. I think it's a great forum for sharing knowledge and sharing the technical expertise that we have here in Mexico. And so I think Doug and the team should be continually applauded and supported where we can to keep technical conferences like this running. In fact, this is probably one of the weaker technical talks at this conference, which is the way it should be. I want to thank the team at Heliostar. I think we've done a lot in a short period of time. We're going to continue to do a lot as a company. So thank you all for the extreme time pressure that you've been under to deliver this. And then lastly, I want to thank all the consultants and contractors that we work with. To move as quickly as we've had to have a lot of support from a lot of people. Environmental, community, metallurgical, resource estimation, hydrogeology, just to mention a few of those. So I want to thank everyone who's here and everyone who's helped us achieve what we have. We're trying to build a team that is highly technically rigorous, and if we do that, we should be successful as we continue to build the company. Thank you.